Cortez Masto will ask the next questions. Thank you.
Thank you. Thank you, Mr. Chairman. Congratulations to the nominees. Hello to the family members. This is almost done. You can almost go grab some lunch, and it's a pleasure for me always to be at these hearings, to see these incredible nominees like yourself who are willing to engage in public service, and so thank you. Thank you. It's not always easy in this environment at times. Let me bring us back to Nevada, my state. I want to talk a little bit about employment. There's sort of paradox in the workforce in Nevada. The most recent data shows Nevada is both the highest job growth and the highest unemployment rate in the country right now. We had the highest unemployment rate in the nation in April, which is about 5.4%, 2 points above the national rate of 3.4%. But we also had the largest percent increase in employment at 4.2% as well. So let me ask all three of you. Let me start, Dr. Kugler, let me start with you, and thank you for meeting with me. You have experience both at the national level as a chief economist at the Department of Labor, and also at the international level as executive director of the World Bank Group for the USA and other entities. As you consider the Federal Reserve's mandate to keep unemployment levels low, how do you consider a state like Nevada in that paradox with respect to unemployment?
Thank you, Senator Cortez Masto. It was really a pleasure having the opportunity to meet with you last week. I have to say that some of the models that the Federal Reserve uses actually takes into account both the levels as well as the changes. So what you're talking about is very important, right? Where do you start from? And are you approaching, is your trajectory moving in the right direction? So interestingly, most models consider one or the other, but I think both are really key and very, very important to consider as one is thinking about monetary policy decisions. So that's a very key question. You want to be moving in the right direction. You want to be bringing down the level, right? So that you're changing more and more rapidly, so you're eventually bringing down the level and bringing down the level of unemployment for everyone in the state of Nevada, hopefully. So that's very key. I think another key issue is how are we considering labor force participation, and how are we considering the marginally attached, for example? What's the real tightness in the labor market, which you don't usually get to consider very well in some of these measures, the standard measures of unemployment. It's helpful to broaden some of those measures of unemployment in order to consider the real tightness in the labor market, which has been a real issue when we're considering the concerns with inflation in the economy. So the other area where I think it is very key to focus on, and the Fed has been moving in this direction in its framework, is in thinking about shortages as opposed to surpluses in full employment. We're worried when people are unemployed, and that should be the focus in terms of that side of the dual mandate. It should be in achieving full employment. If we're surpassing full employment, that would only be a concern if you have a really, really tight labor market. But the concern is when you have people out of work and unable to make ends meet.
Thank you. And Dr. Jefferson and Dr. Cook, how would you share or consider unemployment rates that are seemingly contradictory with a high unemployment rate, but also what we see with the job growth as well? I'm just curious. Dr. Cook, you want to go first?
Sure. Thank you. Thank you for that question. It's a really important question. You and I talked about this in 2021 when I was testifying before Congress before. And I would agree with my colleague here that it's a difference in levels and changes. And what we know about strong labor markets is that they bring in people who may be at the margins of the labor market. So I think it's a good indicator. These are just people who, the unemployment rate is just people who are looking for jobs. And I think following the fact that there are jobs being added, I think is a good thing. And hopefully the unemployment rate will follow. But it's somewhat paradoxical because you can have an increase in the labor force participation rate and have an increase in the unemployment rate, same time, just because more people are looking for work. But that's what strong labor markets do. So I wouldn't consider them entirely contradictory if we're just in thinking economically or statistically.
Thank you.
I would just add that what you've described is a very dynamic labor market where you have certain sectors surging and other sectors releasing labor, and labor then has to be reallocated. So I definitely appreciate your concern with regards to the level of unemployment, but I would also want to share that what you've described is a dynamism in the Nevada economy, and it's going through a transition in which it will settle, I believe, eventually with higher levels of employment overall.
Thank you.